You claimed ITC or input tax credit, but can you permanently keep it? No. There are 7 situations under which the ITC has to be reversed as per the GST provisions. Let us see the situations. First point is, if you have not paid your supplier within 180 days. So here the ITC you have already claimed will be reversed. Then when you make the payment later, then you can re-avail that. Second is taxable and exempt supplies. If you're buying a laptop, or if you're paying for an advertisement, common services you are using for taxable and exempt. That meaning only taxable portion you can claim ITC. Then personal and business use. Imagine you bought a laptop. You are using it for personal and business use. Whatever portion you have using for business only can be ITC can be claimed. Then items given as free samples or items written off, lost, destroyed, you cannot claim ITC. Then the ITC blocked under section 17 subsection 5. So motor vehicles, outdoor catering, fitness or club membership, all this ITC is blocked. So you cannot claim ITC for that. Then rule 42. Rule 42 is for input and input services. Input services meaning you are using a common advertisement for taxable and exempt supplies. That meaning only the advertisement charges paid for the taxable supplies only you can claim ITC. Rule 43. This is for capital goods. So you purchased a machinery which you are using for taxable and exempt supplies. Only the portion you have used for taxable item only can be claimed, ITC can be claimed. Now rule 37A. Rule 37A is important. Say for example, now we are in the financial year 26-27. You made a purchase for 1 lakh and you paid 18,000. 18,000 is GST. So you have paid 1 lakh 18,000. Your supplier has filed in the GSTR1 or IFF, that is invoice furnishing facility. That meaning you are claiming ITC. But you have to remember this. He has not filed the supplier has not filed the GSTR 3B. That meaning ITC whatever you claimed will be reversed. But you can claim it later when the supplier is filing the GSTR 3B. So ITC reversal is possible under 7 situations, and this rule 37A you have to adjust before 30th November of the next financial year. That meaning we are in the 26-27 financial year. A transaction happened, ITC reversed for as per rule 37A because the supplier has not filed the GSTR 3B. Now 27 March 31st this financial year will end. So that rule 37A that has to be reversed before 30th November 2027. This is the rule for rule 37A. So these are the conditions regarding reversal of ITC and rule 37A.